Hello and welcome to another Bybit tutorial. In this tutorial, I would like to talk about options trading. Never really talked about options trading on this channel, but this is also an educational channel. So for everybody who might be already trading options on another exchange and would like to know how to get into that on Bybit, or people who just would like to understand what are options, how do options work, is it something they want to explore further, I think this video is for you if you are one of these viewers who are interested to learn more about options trading, because it's normally not like the first instrument that you get exposed to when you get into crypto. So it's one of the more advanced concepts and instruments in financial markets, especially in crypto. So please be aware there are certain risks as well. I will talk about that, and I also talk about why someone would, for example, trade options. First of all, you need to understand what options are. If you have no idea so far, then we'll start with an introduction. Then I'm going to show you how you can actually find the options trading dashboard here on Bybit. So let's talk about what options actually are. So options, first of all, are contracts that give the buyer the right, but very important, not the obligation to buy or sell an underlying asset at a specific price on or before a specific date. So there are basically two types of options. There are so-called call options and put options. A call option gives the buyer the right to buy an asset at a specific price, and a call option will therefore become more valuable as the underlying asset rises in price. So let's say when Bitcoin rises in price, that call option will also become more valuable. So a long call can be used to speculate on the price of Bitcoin rising, because basically it has unlimited upside potential. The maximum loss is only the premium or the price that you actually paid for the options contract. So in contrast to that call option, there are put options, and put options give the buyer the right to sell an asset at a specific price. So a long put, for example, is a short position in the underlying asset, for example Bitcoin, since the put gains value as the underlying asset's price falls. So if Bitcoin goes down in value, the value of the contract will go up. So that's just sort of the basics, that you understand that you're trading contracts. Very important. Unlike futures, which are also contracts, the holder of the options contract is not required to buy or sell the asset if you decide, or if the buyer of the contract decides against it. So first of all, let's take a look at the contract specifications before we really get into the trading dashboard and how it works. As you can see, there are BTC call and put options. Actually, it's not only Bitcoin. I think they also offer Sol and ETH options. Underlying, as you can see, is the Bitcoin price. Basically, that's the asset of the Bitcoin call and put options. For BTC, for ETH and Sol, it's basically the same way, Sol and ETH respectively. The settlement coin, very important, is USDC. So you need to have USDC on your, let's say, in your options portfolio if you want to trade options contracts. Here you can see the contract expirations. So there are contracts that expire daily, weekly, bi-weekly, monthly, bi-monthly, and quarterly. This is the trading fee, pretty similar to many other exchanges. And there's a delivery fee, so when it expires you have to pay a fee. And very important, these are so-called cash settled, settled in USDC. It means that, again, normally when you sell or buy, obviously you buy or sell then the underlying asset. So you have to deliver it as well. When you're selling it, you have to deliver it. In this case, however, this is not the case, because these are cash settled. So it's all handled in USDC. All you're doing with these contracts is you speculate in the price of Bitcoin rising and falling. There is no, let's say, physical delivery of BTC after the expiry. So I hope that's clear. Very important as well, there are American options and European options. On Bybit, you can only trade European options. American options, for example, can be exercised at any time between the date of the purchase of the contract and the expiry date. However, the European options that Bybit offer are different from the American options in that they can only be exercised at the end of their lives on the expiration date. So really on the expiration date, they can be exercised. So how can you actually get now into that trading desk? Well, you go to derivatives and then you go to USDC options, and you can see here, that you can trade Bitcoin options, Ethereum options, and Solana options. So in this case, I'm going to talk about Bitcoin options. This is in the beginning, very confusing dashboard. It will look very similar on all exchanges. It's sort of basically standard. Up here, you can select what kind of options contract you want to trade. Then you can see here, in the middle, the expiration date. So you can see all these options contracts here that are expiring on that day, on the 3rd of Feb, and so on. Then here you can see the strike price. That is the price at the expiry date. So for example, here 17,000, they are all sorted by strike price. So it starts here at 17,000, goes all the way up to 26,000 on the 22nd of January. On the left-hand side, you can see all the call options, and on the right-hand side, you can see all the put options. So just as a sort of just another explanation, so when you trade options, you can either buy or sell options contracts. So when you buy an option, then you pay a premium, which is the price of the option. And if the price of the underlying asset then goes up and you bought a call option, left-hand side, then you can sell the option for a profit. So there is therefore always a bid and an ask price as well. Yeah, here and on the other side as well. Bid and ask, yeah, it's a market. And then on the other hand, if the price of the underlying asset, in this case Bitcoin, goes down and you bought a put option, right-hand side, then you can sell the option for a profit. However, if the price of Bitcoin doesn't move in the direction that you were hoping for, then you may have to, you will basically pay the premium that you paid for the option. So the price, that is sort of your loss. Just an example. So let's say you buy a put option, right-hand side, on Bitcoin with a strike price of, let's say, 20,000. You can see that here. And let's say with expiration date, I don't know, next month sometime. So let's say 20,000, there we'll find one here. Expiration date at some point next month. Then if the price of Bitcoin falls below 20,000, then you can exercise your option and sell Bitcoin at 20,000 and you make a profit. So let's say Bitcoin's price goes to 19,000, you can sell it for 20 and you make a profit. Example number 2, you buy a call option, left-hand side. So you speculate for the price to rise with a strike price of, let's say, 30,000. Where are we? Here. And also expiration date next month. Then this means that you have the right to buy Bitcoin at 30,000 on or before that date. So if the price of Bitcoin rises above 30,000, you can exercise your option and buy Bitcoin at 30,000 and you make a profit because the actual Bitcoin price has gone above it. So you buy it for cheaper and that is sort of your profit. Now, what is sort of a benefit of a crypto option? Why would anybody do that actually? So I think the benefit is, first of all, of options versus futures is sort of the risk factor. So if, let's say, the market doesn't move in the direction you wanted or you hoped for, then you can obviously choose not to exercise that contract. You would then only lose the premium or the price that you paid for that contract. So that is certainly an advantage. And then another advantage might be that, for example, you hold Bitcoin and you think that maybe a correction is coming, and instead of selling your BTC for whatever reason, for whatever reason, there might be tax reasons, you might not want to sell your actual physical Bitcoin or BTC well, physical BTC, but let's say the BTC, the coins that you own that might be on your ledger or Trezor, you don't want to sell them. So in that case, you could just buy put options. So if the price actually goes down, then in that case, your downside is limited to the actual premiums and the prices you paid. So your loss is sort of limited, and you can use it sort of for hedging. Yeah, let's say with options you could speculate for the price falling, but you still hold your BTC, let's say, on your ledger, which is sort of your long-term HODL portfolio. So there are reasons like that, hedging, or tax reasons that you might not want to sell your BTC. Let's say, for example, in some countries, if you hold BTC for a year, it's tax-free, or the capital gains are tax-free. So in that case, you might not want to touch them before the end of that year. Yeah. So there are various reasons why, for example, options can be traded and are a possible interesting instrument. Okay, so how can you actually trade this? So let's say you are selecting here one of these on the left hand side, one of the call options. For example, we choose the one 22,000 just here for demo purposes, and you can see this is the premium to pay. Yeah, so this is the actual price to pay. You can see the further the price goes up, in this case, the lower the premium gets. Here 24,000, maybe quite a low premium. So that's what you actually pay. So if you can obviously buy the call option, you go long. If you do that, you expect the Bitcoin price to go up. And if you expect the Bitcoin price to go up and you go long call, then you will make a profit when the price eventually goes up of Bitcoin. Yeah, so you make a profit. On the other hand, when you go long, you can go long put option. So you're speculating for Bitcoin's price to go down. When Bitcoin's price goes down, you will make a profit. Yeah, so the value of the put option will go up as well. And if you do it that way, if you are long put, if Bitcoin's price doesn't go into your expected direction, so it goes actually up, and you are long put and Bitcoin's price goes up, what you can lose is obviously the premium. That's your maximum loss. Same way, if you are long call and Bitcoin's price goes down, your loss will be the premium. Which means that using options, you can make profits into either direction. Yeah, you can bet on the price to go up, or you can bet on the price to go down. So before you can now actually trade options, you need to put some USDC actually into your USDC derivatives account. You can actually find that under the assets tab here on Bybit, and without that you actually cannot trade options. So make sure that you put some USDT there. Before I forget, you can also go short. So you can go short a call option and you can go short a put option. So that basically is then the other way around. So if you go short call, you're speculating for Bitcoin's price to go down, and if you go short put, you expect the price of Bitcoin to go up. Also very important, when you have USDC on your account here, you will see it up here in your margin balance. And another thing to mention is that there is no leverage on options. And again, something very important, if the option goes against you, then the maximum you will lose is the price that you actually paid for the option, the premium, because all you can do is basically you can choose, you don't have the obligation to exercise. You have the right to exercise, but if you don't use that right, then obviously you don't exercise, but you still bought the option. So that is sort of the price you have to pay. Okay, so let's select one of these options. Let's select a call option here, and we just select this one, which has quite a decent premium, 22,500, expiry 22nd of January. On the right hand side, what you can see is, first of all, here the actual description of the contract. So BTC, obviously the date, this is the strike price, and call. I would always double check it, because it could be that you've accidentally selected the wrong one, and then you see P here for put. So you want to make sure that's all correct before you accidentally trade the wrong contract. So let's take a look here on the right hand side. Let's say you want to buy that call option. You can select limit, and then you can decide how much you actually want to pay for it. You can see actually the sort of average price here. and these are the offers. Yeah, so you can see here the quantities. Actually, I would say quite good volatility, quite good liquidity here available for that particular contract. You can see the prices here. You can bid any price you want, obviously. Depends then if it gets filled or not, but you can see there are 48 offered for that price of 380 at the moment. That obviously is moving all the time. So you could say, all right, price, you could say, I just want to, whatever, 350 USD. And then you can select the quantity, for example, 10 BTC. And down here, it shows you the margin that is then required. Obviously, if you have 350 USD for the for your premium per BTC and you have 10 BTC, then it gives you here around about 3,500 USDC, right? So hopefully that makes sense. You can obviously change the price depending on what you want to bid for it. Could also go 450, and you see how that margin required down there changes. And again, you need to have that value on the exchange here. Yeah, in your portfolio. You could also just say, okay, maybe just one. Yeah, and you've got 450. Now you can also make it smaller. So you could say, all right, I only want to trade a smaller amount of the actual option. For example, 0.1, 0.2, and then you can see that the margin required is only 91 in this case. If I've got that price that I want to bid, or yeah, and 0.2 is the quantity, and that's your margin required. So make sure that you have that amount or that balance on your account if you want to trade. Okay, and then if we scroll a little bit further down, and that is really what I like about Bybit. It's a nice overview here. It shows you your so-called P&L. So it shows you your profit and loss depending on the Bitcoin price. So you obviously make money if Bitcoin's price, the price of the underlying asset, again, it could be ETH, it could be SOL, if that goes into the direction that you want it to go. And here you can see, depending on the price of the underlying asset, do you actually make money or not? So as you can see here, if the price, let's say Bitcoin's price would fall. Let's say it went down to 10K. You can see that your loss, the maximum loss, is 90. So it is your margin that you're actually putting in. So it's actually the price for the contract you're paying. Yeah, so your loss is sort of limited to actually the actual margin you're putting in. Whereas you can, in theory, make an infinite profit, yeah, depending on how high Bitcoin is going. You can see that depending on the price, your profit is going to go up. And it's actually quite a nice overview that tells you, should Bitcoin go to this price, this is going to be my profit. Yeah, so let's say Bitcoin went all the way up to 35,000. Obviously, it's not going to do that in that short period of time. Then you could have a profit of 2,410. So it's a nice overview, right? It gives you a bit of orientation. I find it quite useful. And obviously, that's how you make money, to ideally that the price goes into the direction that you hope for. And you obviously, when it goes into the direction that you hope for, when it goes there, you could then obviously exercise the right. Yeah. So why I really like this, especially for anybody who's got limited experience with options, it provides you with a nice orientation. For example, when you get confused with going long call, going short call, going long put, going short put. Because let's take a look and let's just go over to put and select that one. And we say we go long put, and we've got a price here. We select a quantity, and then we can scroll down. You can see here you're going to make money if the price of Bitcoin is going to fall. Now you can also, and again, if the price is going to go up, then all you're risking is your margin. So it doesn't matter how much it's going to go up. It always stays at the level, obviously, that you put in, right? The only other thing I'd like to mention about buying a put, the price of Bitcoin can obviously only go to zero. So that means going long call means you basically have unlimited upside potential, unlimited profits in theory. Here, with going long put, you're obviously limited in terms of how much can Bitcoin's price actually go down. Yeah, so it obviously can't go lower than zero. So it's basically limited between where we are today and zero. Well, it won't go to zero, most likely. Therefore, you don't have that sort of infinite amount of possible profits. Now, something I would personally avoid, especially if you are just starting out with options, is to go short. And I'm showing you why. Because while the advantage of buying call or buying put is that your losses are limited, is you can completely wipe out your account if you go short. I'm going to show you that with an example. If you go short call, and again, just selecting here that 1 BTC, here you can see that you are going to, if you are obviously with that, you are betting that the price of Bitcoin is going down, yeah, but your profits are sort of limited. But if Bitcoin's price goes against you, you see that theoretically you have unlimited losses. That means you have to put much more margin into the account as well. And you can see this can easily wipe you out. So be extremely careful with that. I would not recommend this anyway to anybody who's not an absolute professional. Yeah, going short options is dangerous, especially here as well. Yeah, going short put. Again, just an example. You can see that as well. Yeah, so if Bitcoin's price goes against you, here you're obviously betting for the price to rise, whereas your profits are sort of limited, whereas a loss is in theory also, at least it goes against you massively. So yeah, and that's basically just a basic introduction how you can use options on Bybit, how they do work. Works very similar on different exchanges. I particularly like this P&L probability section down here. Before you get into options, make sure you understand it fully. Make sure you have a strategy around it. For most people, spot trading, futures trading will be fine. I think options can be nice for people who have a bit more experience and are more advanced. And obviously, when you want to get into it slowly, you can try it with a small amount. Nothing speaks against that. But make sure that you're extremely careful with going short here. Extremely careful. I wouldn't do it. Going long, put or call is fine if you start out. Obviously, make sure that you understand the risks involved. But with going long, at least your losses are sort of limited. And I would stay away from short. So hopefully that was useful. This was obviously just a sort of a basic introduction. If you like, at some point I can make a more advanced introduction tutorial also with strategies around it. But this was really just sort of the starting point, just sort of a basic introduction, because I think a lot of people have never really used options or know what they are. So if you don't want to use them, that's fine as well. Just make sure you understand what they are. I think it doesn't harm to understand the different instruments sort of in the asset class that you are trading that's available. So yeah, hopefully you liked the tutorial. If you did, and if you want to support more crypto online, you can use the affiliate link in the description to open a Bybit account if you like to. They sometimes have bonuses if you sign up. That changes every month though, so better to check that out when you click on the link. And other than that, hope you liked the update. If you did, please hit the like button, leave a comment and subscribe, and see you in the next video. Bye bye.